Thank you so much for the invitation. You can see my full screen, Federico, yeah?
Yes, sure, go ahead.
So look, it's been fascinating to be listening to the other speakers. I'm not a technical crypto expert in any stretch of the imagination, but I'm here today to talk about demystifying crypto asset recovery and building on the excellent presentations that you have already sort of been treated to today. So hopefully this will be the simplest. And quite rightly at the end, we chronologically sit at the end of the process. So just to sort of walk you through this side, we'll go into a bit more detail now, and then just look. Let me just reshare my screen. It's just so I might have to do it within this section of the screen. It's not filling okay, so I don't want to take up any more time. I'm having a bit of a glitch on PowerPoint. But just to give you some context about sort of who I am and what we do at Asset Reality. Some of you may know my partner and CTO, Nick Furno. Nick wrote the book Investigating Cryptocurrencies. And myself, I was the world's first auctioneer of seized crypto assets. So formerly a criminal investigator at HM Revenue and Customs in the UK. My previous role is investigating crypto assets. And basically being the asset manager that looks after the seized Rolex, the Lamborghinis and the Ferraris and those types of assets. And at Asset Reality, we're coming at this from a very practical perspective, where we're the organization that investigates, recovers and manages and sells seized crypto assets. And also from a consultancy point of view, we assist government agencies in the overall process of building out their crypto infrastructures. So by working with organizations like GIZ, OSCE, and I'm also a UNODC representative in a personal capacity, we have first-hand experience of the challenges that governments are facing when they're dealing with crypto assets. And it's important that we take this in the context of what it is. It's a seized asset. Fundamentally, whilst we've heard some brilliant inputs about the complexities of blockchain and blockchain analysis, fundamentally, when we think of crypto from a point of view and a perspective of law enforcement, it's an asset. So what is the current landscape within seized assets? Well, we see that global asset recovery as it currently stands has many problems, and reports from Europol and reports globally all agree unanimously that the majority of illicit funds and capital the criminals can reinvest in their enterprises remain in their hands. So before we even get into crypto asset recovery and the complexities around crypto assets, we're seeing that there are major problems in the space of how law enforcement can deny and deprive criminals of their assets. And this is due in no small part to a number of different reasons. We've seen UNODC reports before that look at effective management of seized and confiscated assets. These are the types of reports that countries turn to when they're trying to figure out how best to deal with seized assets. So if you turn to one of these manuals, wanting guidance on crypto assets, for example, unfortunately, it's a bit of a bleak outlook, because before we even get into crypto, we see that police compounds and storage facilities are not geared to deal with the types of assets that are seized. And more importantly, when we think about post-pandemic and sort of financial recoveries, opportunities to increase revenue derived from confiscated property are not exploited. So if we're already struggling with things like seized vehicles in terms of how we recover it, how we store it, how we realize them, then we potentially have a big problem facing us when we deal with crypto assets. But what is encouraging is that we have already seen examples around the world where crypto assets are found to be property. Repeated cases in the private sector and in criminal investigation cases where judges grant orders over crypto as property. So when we're approaching how we can tackle this complex asset, how we can disrupt organized crime gangs, how we can recover this asset from those that are using it as a way of laundering their proceeds, the really encouraging news is that it's property. So we should be thinking about it in that context. So as someone with a law enforcement background, if I know that tomorrow I'm going to be seizing an expensive car or an expensive boat, I traditionally follow the same process. There are 14 non-binding guidelines prepared by UNCAC and UNODC. And number one in the non-binding guidelines, recommendations gathered together from countries all around the world in terms of how to deal with assets. The first is pre-seizure planning. And that is the most important when it comes to crypto. Pamela made an excellent point in her presentation about if you do all of the hard work and do the analytic exercise and you find the crypto asset, what do you do with it next? Where are you going to store it? How do you break the chain so that someone else doesn't have a private key or a seed word or access to the crypto asset somewhere else in the world? That by the time you get back to the police station or by the time you recover the laptop, the assets are already moved somewhere else. It's similar that when you're approaching any category of asset, if you think that tomorrow you're going to be seizing a Banksy or a Picasso or a Basquiat, you don't want to be putting it into the back of a police truck. You don't want to be storing it in a police property store. You want to have conversations with the right agents or the right infrastructure in your agency. We see some agencies around the world have fantastically sophisticated asset management capabilities. I have had the pleasure of visiting many facilities around the world that are incredibly impressive and sophisticated, but many governments do not have the resources or the budget to build out this infrastructure, these multi-story car parks with trickle chargers that can store supercars. Not all governments have those types of tools. So we need to think when we approach crypto assets, how do we recover it? How do we find it? How do we store it? And how do we realize it? Exactly the same as we would if we were dealing with any other category of seized asset. And what we're seeing with the explosion of crypto assets is brilliant work being done around the world. Brazil, Australia, France, the UK, the US, we're seeing crypto seizures popping up everywhere. So governments are jumping into this and they're seizing assets. They are turning over rocks and finding crypto, or they are using sort of public and private sector partnerships and tackling large scale child exploitation online or ransomware or state-sponsored cyber attacks. Whatever the vector of attack, we are finding crypto assets. And let's not forget, and let's step back from the cyber side of things. Regular criminals, as highlighted in other presentations, this is being sold by traditional money laundering coordinators as a way of giving a good old-fashioned drug empire a way of laundering their funds for a fee and giving them crypto assets. So it's not necessarily sophisticated sort of tech-enabled criminality. It's quite often where we're seeing crypto assets popping up is with the regular criminals. And remember, that's not just a law enforcement issue. This is also civil recovery. This is also litigation. We act on behalf of insolvency practitioners seizing crypto assets. What happens when an exchange collapses and the directors of the exchange claim that they were hacked, for example? Were they really hacked? Did they lose the assets through negligence, or did they steal the assets, or were they innocent victims of an external hack? So we're seeing now crypto assets begin to permeate more and more different sectors around the world. We're seeing them turning up in for the disputes on divorce cases. We're seeing them in complex will being distributed in a deceased estate, for example. So this problem is constantly growing, and the challenge of how do we deal with seized crypto is being asked all around the world. But the good news story is it's being done very well, and there are lots of roadmaps for us to follow if we keep thinking about it in the context of a seized asset. And let's just delve into the numbers a little bit. The economic opportunities For someone that used to be a criminal tax inspector and always had an eye on the statistics of our recoveries, how much were we recovering as an agency, always interested me. We're seeing some astonishing statistics in crypto asset recovery that I fully predict that this will only get busier and bigger as governments realize the opportunities as we emerge from the pandemic. Scott talked about the bounce back loan frauds, for example, where governments not only have suffered economically, but actually lost even more money through the money that they gave out to try and support businesses. And we're trying to recover that money. And if we look, for example, in the United States, with the IRS, they reported that in 2019 they had $700,000 worth of crypto seizures. By 2020, that number was $137 million. And by 2021, they were at 1.2 billion. We've seen hundreds of millions of pounds being seized in the UK as well. And if we think about crypto asset recovery versus traditional asset recovery, we realize the scale of this opportunity. So for example, the UK has approximately recovered about £200 million worth of crypto assets this year. Now that figure is set to rise as these figures were based on when they were seized earlier in the year. So even with the recent market dip, they were still seized when Bitcoin was probably 20 or 20,000 pounds. So we've seen nearly £200 million worth of Bitcoin seized by one police force in one asset category in Bitcoin. 43 police forces combined in all proceeds of crime seizures across all categories of assets recovered 220 million over the last year. So crypto assets has the opportunity to eclipse regular assets simply because of the size of the industry. And if we delve into the IRS criminal investigation figures, the most astonishing statistic for me, and this figure was just published last month, was that 93% of the IRS's criminal investigation seizures were digital. So it shows that governments are seeing the scale of the opportunity, and those that are getting involved in crypto asset recovery are getting the dividends and getting the rewards. And for those that don't know, I know there's a lot of experts in crypto on here today, but for those that are new to this, put this into context. The crypto market is bigger than the 12 largest banks combined. Some countries are literally sitting on oil that they are not drilling. As a UN consultant, I get to see firsthand where different countries are positioned in terms of their crypto enforcement framework. And unfortunately, as reported by FATF also, over 70 countries have not got out of the starting blocks, have not even started investigating or regulating or even seizing crypto assets. And I think that's a massive opportunity wasted because of the sheer amounts of revenue that could be generated. If countries embrace this, they could be seizing over $100 billion worth of crypto. If we apply the same metrics of the amount of money laundered against the global economy, there's potentially tens of billions of dollars out there not being seized. So just quickly for a few minutes, what are the options when you seize crypto? Well, we can see other issues in the past where government agencies have seized crypto. We've seen it before, and this is no criticism. This is simply just a retelling of what has happened in the past, where we saw examples of the US seizing crypto, but then a corrupt police officer and member of staff got access to the federal account and stole the asset. So for me, storing crypto assets yourself on an exchange or some sort of custodial wallet you control individually presents a number of risks. We've also seen cases in Canada where big four companies were appointed to manage crypto assets and they lost the crypto assets in one of the recovery processes. Again, highlighting just how complex this little asset can be if you get it wrong. And I often try and tell people, I lecture at the Anti-Corruption Academy in Vienna, and when we talk about crypto assets and Trezor wallets and Ledger wallets, I always tell people, just think of them as little safety deposit boxes bursting with potentially billions of dollars worth of assets. That's how important these can be. And if we think about how we approach other seizures, when government agencies seize cash, they don't keep the cash in the drawer. They don't take the cash back to the police station and store it in their own safe, hundreds of millions of dollars worth. But that's what we're seeing with crypto. Governments opening themselves to unnecessary risks by storing crypto themselves. Now, that attitude has started to change. We've already seen procurement processes starting where public and private sector partnership is being embraced. It's been done in the United States. We've seen US government auctioning crypto through third parties. We've seen it being repeated in Finland, where they've approached and appointed brokers to manage crypto assets. And Asset Reality, we already act on behalf of the Belgian government and other government agencies, managing crypto assets on their behalf, where someone acts as an intermediary, managing the recovery, the management process, and the realization process. So that is already existing around the world. So when we think of crypto assets in terms of the asset recovery journey, think of crypto assets as property. It's an asset that you can attack, you can investigate, you can recover, and you can seize, and you can generate a lot of revenue for yourself, potentially. Public and private sector partnerships are already being used to reduce risk and liability and has been developed as international best practice. And I think most importantly are the opportunities for agencies to substantially increase the amount that they're recovering, because we're already seeing it, that governments that are getting involved and using the tools are generating massive amounts of money for the governments. So I'll leave it there because I'm very conscious of our time. I'm happy to answer any questions there might be. And also if there's any follow-up questions, please feel free to get in touch. And apologies for my PowerPoint glitch inexplicably at this point. Will not move on full screen mode.
No worries, Aidan. Your presentation was fantastic as always. So let's have a look at some of the questions that were asked. Maybe we have time for one or two.
Yeah, I can see the top question. It's an excellent question and one I often get around strategies for early realizations. Again, think of it as any other asset. If we seize a Lamborghini or a Ferrari, should we keep it for 3 years while a case continues, or should we sell it early? The legislation in governments like the Netherlands, for example, allows them to sell depreciating assets very early. I think the risk with crypto is that if you sell it early and it rockets in value, you've missed an opportunity. Or the defendant, if they're not guilty, you may be exposed. Now, I also know there are other cases around the world where governments have sold crypto assets due to volatility. The defendant has challenged the decision and the judge found in favor of the government because of the volatility argument. So I think on each case, on a case-by-case basis, the easiest way to navigate it is to ask the defendant, do they want to sell their asset because it's volatile? If the defendant says no, take a record of their decision and then let the due process flow through. I think a more interesting point is also around staking and liquidity. And we've seen in France where the AGRASC, the Agency for Asset Management, is able to fund itself off interest of seized bank accounts. I think there's an opportunity for governments to be more innovative with crypto portfolios and actually potentially and safely, of course, find ways of generating effectively interest on the seized portfolio that could fund more law enforcement.
Also, the second question is very much related. Are maybe stablecoins the answer? Would they enable?
I think you're still into the same issue, Federico, that you're changing one crypto asset for something else. If the person is not guilty and the other asset value has dropped against the original, you're exposing yourself. I think if you're going to do that, you may as well just convert it into your local currency if you're already going to make that first decision.
Sure, got your point. So thank you very much, Aidan. It was a pleasure having you here and listening to your presentation, because it really closes very well the entire process. And it was really interesting what you said. So thanks a lot.
Thank you.